Hey everybody, this is Calvin Waite. I trade crypto for a living. I'm not a registered or licensed financial advisor, planner, or broker, so nothing on this channel should be taken as a recommendation to buy or sell. I also trade all of these things, so I probably have a vested interest in there. But there's plenty of entertainment value and lots of education, so this will be awesome. For those of you who didn't know, my subscription channel is live. So look at the link in the description over at cryptoinfluencers.com and you can see how I make all of my trades and what I do and what I think about everything. This channel is for more hypothetical and looking at trends, and the other one is for actual trading, so you might be interested in that. Good afternoon, everybody. I decided to just start this a little earlier because I'm not too worried about the S&P, although I think it really strengthened Bitcoin's case today. S&P's up 2% right now, and Bitcoin's up only 1.38, which is a little odd, but Bitcoin's doing its own thing. So I'm kind of gonna focus a little bit more on Bitcoin today. But yeah, just wanted to point out a couple of things. First of all, I figured that with about 3 days to go, it would be worth looking at the Bitcoin monthly chart. At the beginning of October, we were a little bit nervous on how closely, so this this yellow orange line is the previous all-time high in 2017, and we had stayed above it, and then we had this kind of weird doji, kind of not an indecision candle, but very tight body. So it's close enough to being a tight body that we were wondering, there's about a 50% chance this is a reversal candle. So it was a little difficult to see. The one thing that we agreed upon was that as momentum built heading down, that this sure is a decrease, because the size of the candles getting smaller shows that bears are running out of gas. And the only way bears will ramp up again is if they trick people into going long, get some people in a vulnerable position, and then redump to create that emotion. But as far as the fear goes, they've kind of ran out of fear, and this was just kind of a natural bounce from what a huge candle this was. So September's close was pretty questionable. It was really kind of a tough close. Well, we are 3 days and 5 hours away from Uptober ending. It was a pretty mild Uptober. We just barely got a reversal just less than a week ago, like within days of, well, I mean, a week or more because of the exit of that descending triangle. But either way, even if this was our close, it would be extremely bullish, because technically, since this isn't a full doji, this is a bullish engulfing candle, which would set us up for an expected move up in November. So from a monthly standpoint, if all remains as it is, there are some pretty decent signs in the chart that we will probably have a strong-ish end of year. And that's kind of what I am expecting and hoping on. We haven't looked at the weekly chart for a while, but you can kind of see where the prior all-time high was in 2017 and how it's kind of played in. Lots of emotion around this psychological level of the number itself is 19,698, so it's about 19,700. So we were below it for 5 weeks. 5 weeks we found this as resistance, and this week will be our first week where we've broken through. It'll take one more week to show confirmation, but you can totally tell that our trajectory has completely moved out. This 5-week consolidation period has moved us further and further along, away from the downward pressure. So the next thing I wanted to point out and just talk about for a minute is how we're looking on the daily and some of the kind of maybe some of the expectations of the AI indicator that I built on this. So I just refreshed it with intraday data. So this isn't an official close. We still have 5 hours or something. But interesting to think through the possibilities here, because any case that we see 55 days from now are the most likely events are extremely bullish. So the worst case is probably the example of 2012. Okay, sorry, I had to fix a bug. Don't know what that, I figured it out, but anyway, irrelevant. So what happened is this is kind of the bearish case scenario, and this was 2012. And even then, we were mostly through the bear market. Like, we were already on our way. So let's see if I can refresh this a little. Yeah, I guess that's as good of a scale as we can get. Just because the numbers were so small back then. But almost all of the scenarios are very, very bullish in the next 55 days. And that is pretty interesting. It kind of tells you a lot about where we are. If you'll notice, the one thing that's really interesting about this data set is that the most likely events besides 2020, so that was a little bit of a move up here and then down again, was that we are mirroring 2016 so closely and closer than anything else that it's showing up quite a few times. So it might be worth investigating what happened in April of 2016, and the 23rd is the most precise data point. So let's look and see, just because this chart's a little flat, so it might be interesting to kind of zoom out a little bit and see what was going on back then. So April 23rd of 2016, and I've kind of got it queued up already. So let's look at April. So April 22nd of 2016 is this, or 23rd, is this data point here. So I don't think it's gonna take a rocket scientist to see the similarities between these charts. Isn't that something? So we've got moves down from higher ranges. We've had a pretty kind of our little bit of a relief rally, and that matches this really well. And then we just had this full-on dump out, and the bottom of the dump out was right here. What we did not get at the bottom of our selling climax this time around was a big bounce. So this one actually bounced pretty high, and then we had our little move up and move down exactly like we had here, except for this was just at a lower range because we didn't get our bounce like we did back in 2016. So we had our selling climax, and then we've been moving. We kind of had our little run up and run down, and that's exactly what we've done. And according to this AI, it's picking this particular day as the most like event, which is not a perfect match either, because if you take a look, in this case, we still haven't broken out of this line here. Well, yeah, I mean, not really. We didn't eventually. Today's data point would have been kind of the final movement. But you can see that in our current chart, we're actually a little further along. So we're actually in a better place than we were right here. But very, very fascinating to see such a similar result. And now, what is the potential? Like, what did it look like in the days ahead? So we weren't, like, even when we broke out and had a little bit of relief, it wasn't all, you know, we weren't completely out of the woods completely. We had a little bit of a return back to establish higher support, which is perfectly fine. And then by the time we were over here, we'd convinced the market that the downside was out, and especially this move here sold the rest of the market. and then we had a couple of days of sideways, and then we started really going. One final flush out, and then we stayed above the 200-week moving average pretty much until recently. So this was about 6 years of staying above the 200-week moving average. So kind of an interesting data point to look and compare what we're doing now, because there is one kind of interesting similarity. It's not necessarily this particular point, because I'd say that we're a little bit more mature. Even though the market doesn't match it perfectly, what does match really well is this touch here. I'm going to zoom in a little bit more so you can see. But you can see here that we broke above, so we exited the red zone right here, and we touched the 100, or yeah, the 100-day moving average. So that's exactly this move here. We broke above and touched the 100. In this case, the 50 and 100 were pretty close, and so it took a little bit more work. But our first initial rejection of the 100, it brought us down, and we ended up losing the 50 for a little while, and then we kind of played with it for a bit. But it was finally, it was probably a month later that we finally closed above the 100 and the 50. And this is this is when things are going to really, really heat up. You'll notice that the 200 by now had come down a long ways, because we had really, really flattened out. We'd flattened out for almost 200 days. And you'll see that our 200 is coming down really close. So we're probably more similar to this as far as how far we are along. We're rejecting off of the 100. I honestly don't know if this is temporary, because our market is more savvy. There's a lot more eyes on this. So if we show a little bit of strength, the market might surprise us. We might break above the 100 and things will escalate a lot faster. But it's very interesting to kind of see what the AI is picking up on to see, where there are matches and where there are possible weaknesses, but also strengths. And I think that we're in a little bit more advanced time frame here. So very, very fascinating. There are a couple of other things to talk about because Ethereum is doing so well, because Ethereum broke out and did cross the 100, so it's doing its own thing for sure. But I kind of wanted to point out this pattern. So whenever you have a move up and then you have a red day that's at least 50% followed by a green day, this is a strong pattern. The reason why is because this kind of gives you a little bit of a foothold. You've found a higher support, and then you're ready to continue with some strength. And you'll notice that the opposite happened here a couple of times. In fact, 3 times. 1, 2, 3. And so now we're kind of stepping up. This was 1, this is 2. I don't know if we'll get a third, but this is a very strong pattern. It's rare, and I'll just point out just any old random coin. Let me just pick one down here somewhere. Yeah, in fact, no, I know which one. There are some that haven't quite exited the red zone. Let me get up here. See these that rejected off of the 50, and then they're trying to gain more strength. A rejection off of the 50 is actually, in this case, very healthy, because if you have a coin that just crosses a barrier and just goes up, and especially when it gets vertical, there's not a lot to catch you on the way down. So we really want to establish some support. And so if you can take a pause, especially at a major point like a 50 moving average or a major point of support or resistance, if you can kind of stop there and wait for a couple of days and then break it, that outcome is 100% preferred over just kind of slicing through, getting really toppy, and then struggling. So this move on Ethereum, where we've gained a little bit of footing before we go vertical, it's actually going to strengthen this move. So I mean, these moves aren't going to last forever. I mean, there's always ups and downs. But when I see stuff like this where we're kind of taking our time to gain some footing, it's nothing but positive. So I really, really like this, like seeing this. So now there are a couple of coins that are following. I mean, all the alts are doing well, mostly because of Ethereum. But the winners are SHIB decided to negate this huge bearish candle. So this is definitely a show of strength on SHIB. So I'm actually probably gonna, well, definitely if we close above the red zone, this is an entry point for me. There are some others. Let's see, okay, all the ones down here. So OP is doing exactly that. It took a pause at the 100, and then we're breaking out. So this actually has probably more legs to run because of this move here. We're getting toppy though, so if you're kind of on the sidelines, you might be a little late on this one. But the pro channel, we were all in. We were making sure that we were long at about this point right here. So let's see. Dogecoin has been on the news because of the Twitter and everything, and speculation that it might take over some of the Elon will put Doge into Twitter in some way. So a lot of speculation there. But yeah, for all of us that were in right here, our double, our first place taking profits is right in here. So we're getting pretty stretched out here, but we'll see if we have enough momentum for that. Just a lot of good moves. Sushi's one that has been performing really well. It's kind of taken its time, but it's well above the 200 now. And these will eventually start moving into golden crosses. And once we get some coins with golden crosses, the next step is green zone. We only have one coin in the green zone right now, ENS, and it is found. So I drew this when there were 3 points right here, and then this one was given to us. This top came in through here. This was a support off of this, and then a final support. So we've had a touch on this line 6 times. So that's not always great. You want to establish that support, but then you want to get off of it. This candle here says that we are, but you touch something too many times and it'll break. So anyway, we're watching all of these. But yeah, for having just one coin in the green zone, you can kind of tell where we are in the cycle, which means the opportunities are now. So for those who are confused about how to trade and what to do and how to manage risk and everything, I would invite you to come over to the pro channel and see what we're doing. But yeah, there will be a lot of coins in the red and yellow zone that will exit today. So our list is going to get really long very soon, which means there's going to be a lot of activity this month. And I'm hoping to see some of those dividends in November. So I'm a patient trader, but it'll all play out in the end. So it's gonna be really, really cool. And it's fun to have you guys along for the ride. All right, you guys, I think that's about it for me today. Overall, just a really, really great day. I love the strength that Bitcoin's showing. You know, with this little bit of consolidation right here, it pretty much cemented this resistance as a flip to support, which is just absolutely perfect. That's absolutely what we want to see in the structure of this chart. And so I think this will pay dividends. We should have green days at least by 55 days from now. We should be remarkably higher than where we are here, according to the data. All right, you guys, I'll catch in with y'all tomorrow.
Thanks for making it to the end of my video. So just remember, keep your trade small, be patient, wait for the trade to come to you. Don't get caught up in all of the hype. You guys are gonna kill it.